Hi everyone, Lee Lowell here, smartoptionseller.com. Today is Saturday, May 23rd, 2020. Hope everyone is doing well. Hope everyone had a great week. It is now time for another edition of your Saturday Synopsis. This is what I like to do on Saturdays. I like to take a look at the charts, show you what's happened in the markets over the last week, and see what could possibly happen in the week ahead. Pull up some other charts, look at some stocks. And what I like to do is give you some educational content on options trading strategies. I've been in the business 30 years now, so I like to give you some free educational content on how to increase your trading returns by using options. So let's get to it. Let's take a look at the charts. This is what we do. What you're seeing in front of you is my trading platform. I got my charts here, got some quotes here, got an option chain up here. So let's open it up, get a bigger look at what's happening. What you see in front of you is a daily chart of the front month E-mini S&P 500 futures contract. This is the June 2020 contract. Futures contracts, a lot of them trade in serial months, meaning after the June rolls off the board, then we will get the September futures contract. So we've got the June S&P 500 daily futures here. Each one of these bars is 1 day's worth of trading. Top of the bar is the high of the day, low of the bar is the low of the day, and on the right-hand side is a little dash. It's where the stock or the future closes for the day, and on the left-hand side, a little tick, a little dash, shows you where it opened for the day. So what are we seeing on the charts? E-mini futures. Once again, I show these charts all the time. Got the big down move from the coronavirus and this incredible V-shaped spike. We've come up quite a bit from the bottom. Now we're starting to get a little toppy here, starting to flatten out here. This past week of trading is probably the smallest. I think this is the smallest range from high to low the whole week than we've had since the coronavirus struck in third week of February. So each week we've had such huge ranges, highs and lows. But this past week, extremely small. That things means people are getting a little tired. Things are tightening out. Not really sure where the next move is going to happen. So we can see we've kind of got a little curved top here, slowing down a bit. We've got Memorial Day weekend happening in the U.S. here. People are starting to get their bearings. We've had this great bounce, and we're digesting all the news. We got lots of pharmaceutical companies trying to create a vaccine for the coronavirus. We've got the U.S. government and governments around the world stepping up and buying everything in sight, adding tons of liquidity to the markets. We've got economies starting to open back up again here in the U.S. Lots of businesses reopening in a limited capacity, staying safe. So people and investors have been enthused by all that news. The one thing that's holding me back is the huge unemployment here in the U.S. at least. We got lots of people unemployed, which means spending is going to be curtailed. So we'll have to wait until the next round of earnings comes out. Q2 earnings don't come out till end of June is when it ends. So in July and August, we'll see some results from Q2. The Q1 earnings are just about done now. We've got a majority of the S&P 500 companies have already announced. We've got some good earnings, some bad earnings, some mediocre earnings, but enough to keep this rally alive. The bid has been strong. On the charts, we see the 200-day moving average. I've been talking about this, still hovering around that $300 level. I usually bring up the SPY, bring that up right now. So it's pretty much the same chart. The SPY is the ETF for the S&P 500. So we've got the 200-day moving average still hovering around 300. It will act as resistance. We've been trying to get up there. Might hit it next week, but it looks like we're getting a little tired here. And depends how things start to unwind over the next few weeks in response to businesses opening up. If we get some spikes in more coronavirus, people getting sick again, may start to turn over in this market. The market may start to come back down again. And then when Q2 earnings start coming out, we feel the real brunt of the coronavirus on businesses. And if it's bad, this thing will start to turn over and die a little bit on us. But we know the governments are going to be backstopping everything. So we're kind of at a pause here. So what I see coming up for the next week is we'll probably tag the 200-day moving average around 300. That's just on the S&P 500. Let's bring up the NASDAQ, which has just done incredibly well. since the bottom. NASDAQ real strong. You got the big names. You got Google and Amazon and Facebook. All these companies, they're just driving the whole NASDAQ itself. So look at this. Gets this incredible V-shaped bounce. And we're just a touch away from the all-time highs here. So the NASDAQ's been doing real well, real strong. Take a look at the Dow Jones Industrial Average. Not as strong as the NASDAQ. You know, we've had a good bounce, topping out here, flattening out here. Still a little ways from its 200-day moving average. So the Dow is not as strong as the others, but still definitely has had a good rally. Let's take a look at the VIX. You know, I like to talk about the VIX. The VIX is the fear and volatility indicator of the S&P 500. It moves inversely to the general market. When the market drops, people get fearful and the trading ranges get a lot bigger. That sends the VIX, the volatility level, higher. And when the market starts to go back up like it has been since the March 23rd lows, the VIX starts to come off again. One thing the VIX also does, it has a huge influence on the price of options contracts. When the VIX spikes, option prices get a lot higher. Get more money in your pocket if you sell these put options. Something that I do. If you're an option buyer, you're paying up. You're paying up a lot more for options than what they were back down here. So the VIX moves inversely to the general market direction, gets the spike, and then it drops just as quickly as the market moves. So been looking at those. Let's take a look at a couple other charts I've been seeing. We've got Intel. You know, we like to draw some support and resistance levels. We do some technical analysis here. We could draw a couple trend lines here. We've got some support here. Looks like we got some resistance here. It's what's called a channel. You can see Intel has been moving, bouncing around in this channel, right? Once it moves out of the channel, it should power it in the same direction where it pops out. Intel, right around $62 was level of resistance. $56 or so. Support popped out. So if the general market is strong, you're going to see Intel keep moving up. It's coiled up this power here. It's been coiling up. It's ready to bust out. Popped above the line. Intel should be good to go. If you look out on a longer term basis, Intel, we can draw another trend line here. You know, if you're a buyer of Intel, you sell some put options on Intel, here you got some support right in the low 40s, $42 or so. This is a long-term basis going back to about 2017. Nice support for Intel around $42 a share. Another stock I've been looking at, we've got Nike. Everybody knows Nike. Been watching those Michael Jordan specials last 5 weeks on ESPN. Great documentary on Michael Jordan. Nike. Draw some trend lines here as well. Looks like we had some, resistance up here, and we got a nice little, upsloping trend line there. Once, just like Intel, popped up through the resistance here. If the general market goes up, Nike's going to be a strong mover. It's going to power up. Wants to go back to his all-time highs around $105 a share. So those are some charts I'm looking at. Now, on to some option trading strategies. What are we going to talk about today? I've got some people telling me, Lee, I was lucky to buy some stocks during this move, and I've got some gains built up, but I want to give the gains back. What can I do? How do I protect a little bit of my downside? Well, we can talk about one of the most classics of all option trading strategies, which is selling covered call. Selling covered calls is something that I've talked about in my book, Get Rich with Options, one of the 4 trading strategies that I highly recommend. Let's look at a chart of Disney for a second. Disney, one of my favorite stocks that I like to look at. I trade options on Disney. Disney has had a nice move off the lows. Started at $150 recently this year. Went down to $80. Now it's back up to $118. It closed yesterday, Friday, May 22nd. So if you bought some Disney shares, you want to protect a little bit of your downside, what can you do? Selling covered calls is a great option trading strategy. Take a look at an option chain here. This is my option chain from Interactive Brokers. And we've got option chain for Disney pulled up here. You can look at all different expirations. You can check options can trade on weekly, monthly. You can go long term, short term. So we got an option chain here of Disney. We got call options on the left, put options on the right. Last trade for Disney, $118 a share. We're looking at the October 2020 expiration date for Disney. Let's just say you bought Disney at $100 a share during the coronavirus meltdown. It's now at $118 a share. You got a nice $18 profit built up. You want to protect a little bit of that. What can you do? Well, selling covered calls is a great strategy. For every 100 shares of stock that you own, you can sell one option contract. You can sell one call option contract, basically renting out your shares. What does that mean? Well, let's just say you want to take a $50 profit if you can get it. And if you bought the shares at 100, you're looking at $150 that you want to possibly sell some shares of Disney. So what you do is you go over to the call side, you look at the 150 strike, see what those are worth. $100.67, $1.91 offer. You could sell those somewhere in the middle, let's say $1.75 a contract. What does that mean? Well, for every one option contract you sell, someone will give you $175. And what does that do for you? Well, you're obligated to sell your Disney shares. You have to sell your 100 shares at $150 per share. You bought them at 100, you have to sell them at 150 now. Someone will give you $175 for your obligation. If Disney goes up to 150, you have to sell your shares. If Disney doesn't go up to 150 by October, you get to keep your shares, plus you get to keep the $175 that someone gave you. And you know what? Then you do the process again. You go out a few more months in expiration date and you sell another call option on Disney. And if Disney doesn't get up to that level, option expires, you keep your money again, you keep your shares, you keep rolling your covered calls, you keep doing it over and over and again. Increasing your income. It's a great way to generate income and set an upside profit potential for you. It also gives you a little bit of downside protection. If Disney drops a little bit, you've got a buffer of $1.75 a contract that you've sold this. So you're taking a little money, you got a little bit of downside. Selling covered calls is a great strategy. Every option trader, every stock trader should be selling covered calls. Now, talking about Disney, let me show you something I've been doing of late. Disney, $45 a share, 45 strike. I'm selling these put options. That means I'm giving someone an obligation that I'll buy Disney at $45 a share, and they're paying me to do that. Someone actually thinks Disney's going to fall from $118 down to $45. By October, they're paying me for my obligation to buy Disney at $45 a share. Go back to the charts. Long-term chart here. Take a look. Disney, 45 bucks, all the way down here. Last seen in 2012. I'd be fine buying Disney at $45 a share with my obligation running through October expiration. Disney's at $118. I'll buy Disney at $45. Someone's paying me to do that. This is not a live recommendation. This is just something I'm doing myself. So don't take this as a real trade, a real example for yourself. Just telling you what I'm doing. So Disney. Anyway, if you want more information on selling and covered calls, you can go to our website, smartoptionseller.com. Click on the blog from August 9th, August 10th actually, the real deal with covered calls. You can read about the strategy, got the charts. Did a trade on Walmart. Selling covered calls. Want more information about us? Go to our website. Download your free Put Selling Basics guide, how to sell put options. You know I love selling put options. Go over to the services tab. You can see our newsletters and one-on-one coaching services. That'll do it for me today. Hope everyone has a great week, great weekend, and I will check back in with everyone next Saturday. This is Lee Lowell signing off.